Hey, this is Deepak here from digitaldeepak.com, and in this video we are going to have a look at what it takes to build a dream team for your consulting or coaching business. So here I have listed out a bunch of different roles that need to be done in a consulting or coaching business, and it's not necessary that you need to have one person for each of these roles. In some cases you will be doing some of the roles, and when you are expanding as a team and when your business is growing, you can have an individual person for each of these roles. So this is again my suggestion and the way I look at building my dream team. So you can make modifications in this and make it suitable for your business, but you can take inspiration from this. So the first person that you need in a consulting or coaching business is a co-founder. It is not necessary that you need to have a co-founder every time. That is an individual preference. I know a lot of successful consulting business owners who are running it as a solo founder with a team but without a co-founder. So what it means to have a co-founder? A co-founder should have at least 10% stake in the business. That is how Y Combinator defines it, that if somebody has less than 10% stake in the business, then it means that they are not going to be necessarily a co-founder. It could be an employee with some equity. So 10% is minimum, but ideally I would recommend anywhere between 30% to 49%. So if you are the person who is starting the business and if you are taking a co-founder on board, and if you feel like, hey, this person is going to be critical for the business and this is going to be very long term, you can give up to 49%, but I recommend that you have the controlling stake of the company, which is at least 51%, so that you can have the shots on major decision making, right? You call the shots. So this co-founder should not be having similar skills. A lot of people make the mistake of hiring somebody who is exactly like them and exactly has the same skill sets as them. It should not be like that. You should be hiring a co-founder who has a complementary set of skills. For example, in my business right now, Jayant is my co-founder and he takes care of operations and a lot of delivery part, and he is very organized. He is not chaotic. He is not somebody who operates under chaos. I am somebody who operates under chaos, right? So when you are running a business, you need a certain element of chaos so that you can bring in creativity and new ideas into the business. You can take initiatives. That should be the role of the CEO. And the role of the COO should be to be very organized and make sure that things are taken to completion of what the CEO starts. So I felt like Jayant was such a person. Jayant was also my student. I was mentoring him in one of the internship programs that I was running, and looking at his skills, I eventually gave him equity and asked him to join as a co-founder. They should definitely believe in the vision of the business. If they don't believe in the vision, they are going to be temporary, and there is no point complicating it with giving equity if they are going to be temporary, right? So first work with somebody in an employment capacity for like 1 or 2 years and then make a decision to give some equity. You can also say that, hey, I will give 10% now, 10% after 2 years, or you can say, hey, I will give you 2% every year for the next 5 years, whatever that is going to work for you. End of the day, this does not matter too much, because irrespective of what equity they have, if they are doing equal responsibilities, they will be equally profiting from the company. You are just going to have the satisfaction of having a little bit higher equity if the company goes for funding rounds, if the company goes public in the future, because you started this entire business. The co-founder should not be like a co-CEO. Right? A lot of people make that mistake. Hey, we will be co-managers. We will manage everything together. So what happens in that case is that you have a lot of conflict. You have a lot of gridlocks in decision making, and things does not move forward because there is not one person to make a decision. So here I am the CEO, chaotic, vision setting, coming up with new ideas, new products, taking initiatives, building relationships outside, in the business community, with the customers, branding, and also managing relationship with investors, and larger responsibility over hiring and building the team. Where are we going to work? How are we going to expand? Should we slow down? Should we speed up? And a COO is somebody who is a chief operations officer who is going to be very systematic and getting things done. And this is the requirement for a co-founder. So if you have a co-founder, things can get easy. I have run businesses previously where the co-founder match was not good. There I had not given this lesser equity because I believed that, hey, we are just starting this together. Let's just be equal co-founders. So when you do 50-50 equity, a lot of time is wasted on, discussing things and, just not taking decision on things, right? He wants something, you want something, both are equal co-founders. It's like having a car with 2 drivers and 2 steering wheels. The car is not going to move efficiently, right? You need to have one driver for the car. There are cases, for example, when you look at Razorpay, there are 2 co-founders, and as far as I know, at least until I knew, while I was working in the company, they had equal share. That can work when you have very good understanding, very good friendship, and most of such co-founder relationships come from the college itself. So if you have studied together, grown up together, then you have a level of understanding. But if you are starting a little bit late, few years after college, making a 50-50 partnership work might be very difficult. So that is about it for the co-founder. The second most important person in the company is going to be a bookkeeper. Compliance is a very, very important part of any business. So they say, if you think compliance is costly, then try non-compliance. It will be even more costly. Tomorrow, if you have distractions, such as having some penalties because you did not maintain your books properly, that is going to take away focus from product building. It is going to take away focus from serving your customers. So from day one, you have to keep your books clean. So we have a bookkeeper, and he takes care of reporting daily transactions. So every day, any credit or any debit from the bank account of the company, it is added to an Excel sheet. If it is a credit, then there is a customer invoice against it. There is a GST component to it, and there is a revenue component to it and a tax component to it. Let's say somebody is selling a product for like 1 lakh rupees. It's going to be 1 lakh plus GST, which is 1,18,000. So 1,18,000 comes into the bank account and it goes into the cash flow, and they think that entire 1,18,000 is theirs. But obviously you have to pay 18% to the government, which is going to be a compliance requirement. That is the law of the land. You have to follow that rule, right? Otherwise you can't do business in the country and access the customers of that particular country. So immediately as soon as we receive, let's say 1 lakh, 18,000 is kept separately as a tax component. If it is going to be an input credit, then you still have to file it, pay it, and the customer is going to get input credit if the customer has a GST number. If it is a B2C invoice, then there is going to be no input credit for the customer, but you have to pay that 18,000 to the government minus any outputs you might have, but still your revenue is only the 1 lakh. Don't treat the entire 1,18,000 as your revenue. So while reporting daily transactions, this has to be segregated. What is your revenue and what is a tax component? A bookkeeper is basically like a API, like an interface with the CA and with the government, because the CA office keeps sending me a lot of mails. I have to do director KYC. I have to do monthly returns for GST. I have to do quarterly returns for TDS. So if you are making a payment to somebody and in that you have a TDS component. So let's say I'm paying a consultant. I'm paying 1 lakh to them. I will not pay the entire 1 lakh to them. I will pay 90,000 rupees to them and keep the 10,000 rupees which has to be paid for the TDS. So that we keep separate immediately. A lot of people pay the consultants minus 10% and then suddenly they are having a TDS bill. Oh, we have to pay 50,000, 1 lakh TDS, and that messes with their mind. So ideally have 2-3 bank accounts and put all the tax component in a single bank account, right? So that you don't see it as your business operational balance and you feel like, okay, this is not mine. This is something that have to be paid to the government. And that is the compliance, because everybody who is going to be tax liable needs to have TDS building up, because suddenly end of the year, if you have to pay taxes, you can't generate that cash out of nowhere. So in every transaction, the government is saying that, hey, take away 10% as TDS, keep it here so that we can track how much income they have made, because the government does not trust that person to report their income properly. So the audit trail which happens via TDS, becomes a way for the government to track. I hope we will eventually get to a point where we can trust the government and the government can trust us. But right now, this is the system which you have to follow. And it's also a good system because it makes you financially disciplined and you won't have financial surprises later. That is a compliance requirement. A lot of businesses don't do it. And one of the reasons a lot of businesses don't do it, because the founder cannot sit himself and do it. And if you have like a consulting company who is like a chartered accountant or just a financial consultant, all the data will not go there properly and you have to set the data as the founder. So having a bookkeeper in-house, even if it is a part-time bookkeeper, and tracking daily incoming and outgoing transactions and having an accurate record of how much money do I have right now in the business, minus all the liabilities such as taxes or any payment that you have to do, that has to be there. Invoice control, both for incoming and outgoing invoices. So if a customer purchases from you, you have to issue an invoice, and if you are buying something, you have to maintain the invoice, because if tomorrow the GST input credit does not come, then you have to follow up with them, ask them if they have filed the GST so that input credit comes and shows up on your ledger, right? So if I buy a MacBook Pro for my business, if I buy a mic or a camera for my business, then I will get GST input credit on it. A lot of businesses end up writing it off as an expense, but it's not an expense. It's an asset that you are buying for the company. The asset depreciates and it has to show on the balance sheet and it will come inside the profit, right? If I am buying a camera for 1 lakh and in 1 year, let's assume, by the way, I'm not a financial advisor, so please contact your lawyer or CA or a professional for getting to know about this deeper. I'm just giving you a high level overview. And for legal purposes, maybe we can say that this is for entertainment purposes only, right? But anyway, what I am saying is that if you are buying a camera for, let's say, 1 lakh, and let's say electronics depreciate by 30% or 40%, whatever it might be, you still have 70,000 in your balance sheet, right? It might not be in cash, but it is sitting in there as an asset. And if you are like winding up the company, those assets can be sold for the depreciated price, which means that you have made a profit from the company. So you need a bookkeeper for all that. Don't even think twice about it, whether you need it or not. You can get a part-time bookkeeper for anywhere between 20 to 30,000 a month, and a full-time bookkeeper for anywhere between 40 to 50,000 a month, right? So for all that you need a bookkeeper. Do not ignore that. Then we will look at all the other people that are in the company for a business like this. We have a mentor who is also a community manager, engages with the community, talks to people. If we are launching cohort-based courses, they will be the mentor for the courses. Like I do the internship program, and not all the batches I will be available for them, because it's a relatively like a mid-ticket program. And in a mid-ticket program, you need like a mentor who will take care of your customers. So this is specific for, coaching businesses. You need remote sales closers. And the remote sales closers need to report to the sales manager. In my case, the chief operations officer and the co-founder is also the sales manager for the remote closers. Ideally, somebody who has learned from you, so that they can look up to you and you are their mentor. They need to believe in the product so that they can sell the product for you. So without remote sales closers, you cannot really make much revenue. This is very important, because as a CEO, if I am sitting and focusing on sales, how will I focus on branding, vision, nurturing, lead generation, and then delivery of the entire product, and then finance and accounting, right? All this I have to take care. So we have sales closers who are working for us right now. In our team, there are 3 remote closers who are working on a commission basis. You need a performance marketer. A performance marketer is going to build landing pages, run Facebook ads, track ROI, and report the entire traffic that is received via performance marketing. You need a designer who will design YouTube thumbnails, ebooks, landing page elements. I would also add video editor here. So in my case, a video editor is a freelance video editor. For example, this video, as soon as I finish recording, I will send the video file to the video editor. He will kind of spice it up with, nice elements, maybe music or some animation, and send it back to me. So in my case, I don't have a full-time video editor, but we are planning to hire one. And the designer is going to work with the video editor as and when required. The designer is going to work with the performance marketer as and when required. You need a copywriter. The copywriter will write ad copies, landing page copies, and email copies. So if you look at some of the sales pages, which are long form sales copies, that is written by our copywriter who has been with us for the past 6 years. You need an email marketer who will send daily campaigns to keep the list nurtured, who will clean the email list, make sure that the unsubscribers are removed, cold subscribers are removed, and the entire email list is managed. And the email marketer also needs to manage tags and segments. In my case, in my business, I am the email marketer myself. So I take care of the entire email marketing part, because I feel like this is a very, very important part. And I have been in email marketing for the past 15 years. So that is something that I do not like to outsource. And I'm a little bit of a control freak when it comes to email marketing. You need an account manager who will follow up with clients and coordinate with the team. If you have high ticket clients, instead of like course students, if you have clients and the clients have paid a high ticket for a consulting, it could be done for you service, or it could be something like wanting to execute a particular thing done in their company, whatever service that you are selling as a consulting company, then you need an account manager for that. So this is the entire team stack. A 10 people company like this should be making minimum 10 to 20 lakh a month in revenue. That's the minimum. I know 10 people companies who are also making 1 to 2 crore a month in revenue. That can also happen. This is not set in stone. This is just a guidance for you on how I have seen building my team and how you should be taking inspiration from me to build your own team. So I hope you found this video useful. And if you have any questions, go ahead and leave a comment below this video, and I will see you in the next video. Bye-bye.